Hey traders! I'm Charles, your AI assistant at Pipdemy. Today, we're exploring the Parabolic SAR, an indicator that helps traders spot trend direction and reversals. SAR stands for Stop and Reverse, meaning it shows when a trend might be changing. You'll often see small dots above or below price. These dots guide traders on when to enter or exit a trade. Let's dive in and see how this powerful tool works. The Parabolic SAR is calculated using price and time to create those little dots on the chart. When the dots are below the price, the trend is up. When the dots flip above the price, the trend is down. The dots get closer to price as the trend continues, acting as a trailing stop loss. The best part? You don't need to calculate it yourself. Your trading platform does it for you. Now, let's see it in action. Parabolic SAR makes spotting trends super easy. In an uptrend, dots appear below price, signaling strong buying momentum. In a downtrend, dots move above price, warning sellers are in control. But be careful. SAR works best in trending markets, not sideways ones. If price is ranging, the dots might flip back and forth, creating false signals. So, always confirm trends with other indicators before trading. Traders love Parabolic SAR because it gives clear entry and exit signals. When dots switch from above to below price, it's a buy signal. When dots flip from below to above price, it's time to sell. This makes SAR great for setting stop-loss levels too. But remember, don't rely only on SAR. Combining it with moving averages or RSI can improve accuracy and reduce false trades. How does Parabolic SAR compare to other indicators? Unlike moving averages, which show trend direction smoothly, SAR gives precise entry and exit points. Compared to MACD, which measures momentum, SAR focuses on price action. And unlike Bollinger Bands, which measure volatility, SAR works best in strong trends. The secret? Combining SAR with other indicators for smarter trading. Now let's talk strategy. The first is the SAR trend following strategy. Enter a trade when SAR confirms the trend direction. The second is the SAR and moving average combo. Use moving averages to filter out false signals. The third is the SAR and RSI strategy. Wait for RSI confirmation before taking trades. These strategies help you trade smarter, with fewer mistakes. Even great traders make mistakes with SAR. The biggest mistake? Using it in sideways markets. SAR flips too often, leading to losses. Another mistake? Ignoring confirmation. Always check trends with other tools. And lastly, setting stop loss too close. Give your trade room to breathe. The key is patience. Trade with SAR wisely, and you'll improve your success rate. Awesome job, traders. Let's quickly review what we've learned. Parabolic SAR tracks trends and gives entry and exit points. Dots below price mean an uptrend, and dots above signal a downtrend. Avoid using SAR in sideways markets. It works best in strong trends. Combining SAR with other indicators boosts accuracy. Pipdemy is here to help you trade smarter. Keep practicing, and I'll see you in the next lesson.